Welcome to Cold Brew Finance's U.S. End of Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the week ending Friday, August 29th, 2025. Kicking things off, I'm Max Profit. Key indexes ended mixed with a slight downward bias. The S&P 500 index and the Dow 30 index both hit new all-time highs before closing slightly lower. The Nasdaq composite marked its second consecutive weekly decline, while the Russell 2000 notched its fourth straight weekly gain. Market breadth showed strength in smaller caps, with the Russell 2000 seeing more than twice as many advances as declines this week. The S&P 500 also showed positive breadth with 280 advances versus 216 declines, while the Nasdaq maintained a slight bullish edge. Looking at monthly returns, the S&P 400 MidCap and the Dow have outperformed, gaining 3.2% each in August. Year to date, the Nasdaq Composite leads with an 11.1% advance, followed by the S&P 500 at 9.8%. Over the longer term, the Nasdaq Composite shows the strongest performance with a 16% average annual return over the past decade. The S&P 500 follows with a 12.5% annual rate, while the Dow averaged 10.6% yearly.
Checking out best and worst performing equities, I'm Penny Stock. Inno Holdings leads performers with a 296% surge to 5.19, showing very strong upward momentum. Sound reached a new yearly high at 11.99, up 241%. Weekly returns highlight Inno Holdings' exceptional performance with a 296% return and 55% average daily gain. Sound and Professional Diversity Network both posted strong weekly gains exceeding 200%. Looking at annual performance, Sound stands out with a remarkable 555% one-year return. EchoStar shows consistent growth with a 236% one-year return and 48% three-year annual rate. Among large caps, Wynn Resorts leads, reaching a new yearly high at 126.75, up 10.8%. Decker's Outdoor follows with a 9.6% gain, while Autodesk shows strong upward momentum, rising 8.4%. Weekly returns show Wynn Resorts, leading with a 10.9% gain. Decker's and Autodesk follow with weekly returns of 9.7% and 8.4% respectively, both showing strong upward momentum. Long-term performance shows Decker's Outdoor with impressive 10-year returns of 1,019%. Fair Isaac follows with a 1,668% decade return, averaging 33% annually. Leading decliners, GreenPower Motor hit a new all-time low at 0.34, down 89%. ESSA Pharma also reached a record low at 0.24, falling 87.5%. Trinity Biotech dropped 81% to 1.46. Weekly performance shows GreenPower Motor down 89%, with a 16% average daily decline. ESSA Pharma fell 88% weekly, while Trinity Biotech dropped 81%, both showing strong downward momentum. Leading the week's worst performers, GreenPower Motor plummeted 89.3% to an all-time low of 34 cents. ESSA Pharma dropped 87.5% to 24 cents, while Trinity Biotech fell 81.4% to 1.46. All three stocks showed very strong negative trends with new record lows. Among large caps, Keurig Dr Pepper led declines, falling 17.2% to 29.9, hitting new yearly lows amid strong downward volatility. Hormel Foods dropped 13% to 25.44, while Moderna declined 11.1% on heightened selling pressure. Weekly losses were substantial among these large caps. Keurig Dr Pepper saw average daily declines of 3.6%, while Hormel Foods and Moderna averaged daily losses of 2.6% and 2.3% respectively. Year to date, Moderna shows the steepest decline at -42%. Looking at longer-term performance, Moderna shows the steepest 3-year decline at -82%. Hormel Foods has dropped 50% over 3 years. Despite recent weakness, Keurig Dr Pepper maintains a positive 10-year return of 134%.
And now onto U.S. sector performance, where energy leads the pack, rising 2.4% this week. Financial services and communication services both hit new all-time highs. Multiple sectors show very strong positive trends, with financials notably closing up 4 consecutive weeks. Market breadth reveals financial services showing exceptional strength, with 475 advancing stocks versus 147 declining. Energy displays mixed signals, with weekly advances outpacing declines by more than 2-to-1, despite more decliners in the daily timeframe. Year-to-date returns show communication services leading with a 17.2% gain. Technology and financial services follow with returns of 13.6% and 11.4% respectively. Energy shows the most modest gain at 4.8%. Looking at 10-year performance, technology dominates with a 673% total return, averaging 22.7% annually. Financial services and communication services both show solid gains of around 170%, while energy trails with a 43% total return.
Energy stocks showed notable strength this week. APA led the group with a 7.3% gain to 23.22, marking its 4th consecutive weekly rise. Marathon Petroleum and Valero Energy both demonstrated very strong upward trends, climbing 5.1% and 4.5% respectively. Short-term returns have been impressive for energy leaders. APA posted the highest monthly return at 20.4%. Marathon Petroleum has shown consistent strength with a 28.8% gain year-to-date, while Valero follows with a 24% year-to-date return. Looking at longer-term performance, Marathon Petroleum stands out with an impressive 3-year total return of 71.2%, averaging nearly 20% annually. Valero Energy has delivered solid 10-year gains of 157.6%, while other energy stocks have faced more challenging long-term results.
Leading the declines this week, the utilities sector fell 2%, while consumer defensive dropped 1.6%. Despite smaller losses, industrials and consumer cyclical maintain very strong positive trends. Market breadth shows mixed signals. Healthcare saw more daily advances than declines, while weekly numbers favor the downside. Consumer defensive shows weakness across all timeframes, with declines outpacing advances. Weekly returns were negative across these sectors, with utilities showing the largest decline at -2.1%. Year-to-date, industrials leads this group with a 15.1% gain, while healthcare remains slightly negative. Looking at longer-term performance, industrials and consumer cyclicals show the strongest 10-year returns, with annual rates of return above 11%. Healthcare lags with a -12% one-year return.
Utilities stocks were broadly lower this week. NextEra Energy led the declines, dropping 5.5% to 72.5. Consolidated Edison showed very strong downward momentum, falling 3.3%. Dominion Energy and Eversource Energy both displayed sideways movement over 3 days. Looking at weekly returns, NextEra Energy saw the steepest decline at -5.6%. Month to date, Consolidated Edison has struggled the most, down 5.1%. Year to date, Exelon leads the group with a 16% gain. On longer timeframes, NextEra Energy stands out with a 183% total return over 10 years, translating to an 11% annual rate. Dominion Energy is the only utility showing negative 10-year returns at minus 15.7%. Exelon has gained 95% over the decade.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.